Well, g'day. We're back for another episode of the StoneX Australian Cattle and Beef Market Report. My name is Ripley Atkinson, and I'm the Australian Livestock and Commodities Manager for StoneX, based in Sydney, where we're developing price risk management tools for the Australian beef industry to help the sector manage price and market volatility with our Australian cattle swap. We're brought to you by StoneX Group, a NASDAQ-listed global financial services network with 100 years of experience in global commodity markets. Remember that the trading of derivatives, such as futures, options, and over-the-counter products or swaps, may not be suitable for all investors. Derivatives trading involves substantial risk of loss. You should be fully aware and understand the risks prior to trading. Past results are not necessarily indicative of future results. Well, a couple of short working weeks have coincided with this episode, but there's still plenty of things happening in the market and some dynamics which I think are worth looking at. Some of them are structural, some of them are bigger picture, and some are sort of the here and now, including some weather. But I think to kick it off, certainly from a price perspective anyway, we've seen the peak of this Queensland crossbred market in terms of feeder prices early last week, Monday, Tuesday, and grids are starting to ease off that high since then. But I think from a weather perspective, the big one has certainly been, or looks potentially to be anyway, the forecast of some rainfall for southern New South Wales and parts of Victoria, which I certainly think will be welcomed, and it'll bring a bit of relief. Which in turn, I can see some short-term upside to those southern markets as a result of that rain, if it actually delivers. The third thing, which is a seasonal one, but it's very much now this Angus spread widening over flatback steers as we move into winter, and we see that seasonal dynamic really play out. But to kick off and looking at that first point about markets and pricing of those flatback steers in Queensland, we've just seen, those feedlots start to step their grids back. It's been every bit of 3.5 weeks now since that rain ended in Queensland. Thoughts still go out to those, in the far western areas that are dealing with recovery, where we're thinking of them. But looking at the actual market outcomes, you're starting to see feedlots soften some grid pricing. Accessibility of cattle is becoming a lot easier, obviously. 3 weeks is a fairly long time, and the weather's been pretty generous post that with clear days. It allows the producer to get onto the paddock and muster cattle, and it also allows truck accessibility to improve as well. Naturally, that leads to high supply and more movements, which will ease some of that burden on accessibility of stock for feedlots. I think the other aspect, which I'm certainly getting the feel that's happening at the minute, is the supply chain is doing the sums on buy price, and what that translates to in generating a margin at the other end. We're looking at weaners, crossbred weaners in Queensland at the minute, every bit of $4. The really well-bred steers, well over that. And I think producers are seeing the spot market, and that looks pretty attractive, for a feeder, crossbred feeder, sort of $3.80 to $3.95. But in my opinion, surely they've got to be looking at these current buy prices for weaners and thinking, well, we're going to put weight on these cattle and market them as feeders in the second half of the year. We can't make this work on these current buy prices. The producers will know full well that the delivery of these cattle will coincide with the seasonal, supply of stock out of Queensland, or at least align very closely with it anyway. Because that's the market they deal in. I could be wrong, but I just get the sense the producer is doing the sums and working out the current buy price needs to come back in order to generate a profitable trade. And I think it's why you've seen it really sharply come off the peak that it did in the first week of April, because of that is producers are working out and doing the sums and saying we can't make a margin if we're paying $4.50 plus for good quality steers. The other aspect to it, I think feedlots are doing the same. They'll be well aware of what they will need at a fed price to justify spending, $3.80 to $4 on a buy price for a feeder entry weight steer. And if the fed cattle price isn't conducive, they will know that their cost of gain and where they can make money. And if the two don't align, you naturally have to see the feedlot step back in order for that to align. I think they'll know their cost of gain. You might see some feedlots look at extending days on feed to manage that risk a little better. But I just get the feel it's touch and go at the minute for the feedlot and the producer in terms of margin generated through these trades at the minute, for producers' background in cattle and feedlots buying feeder weight steers. Second point I think is an important one, and this is this rain in the central tablelands, southwest slopes and the riverina and parts of Victoria. I think if it delivers what it's forecast, which is anywhere from sort of 30 to 50 mils for a generally a wide area, it will bring some good relief for these regions. And I think as a result of that rain, over the next week, if it does come, you'll certainly see some optimism return to that market, particularly on the lighter cattle. I think you'd need to see a fair bit more for a genuine, season turnaround rainfall before we got too worried about, where breeder prices and whatnot could go. But I certainly think on the lighter cattle to do a trade on, if some have been lucky under some storms, you'll see some upside in the next fortnight because of that rain. But we know obviously it's been so dry down there, a lot more will be needed for that region to really turn around. But nearly aligning perfectly with Anzac Day, so will certainly help the croppers. But looks to be potentially the start of that autumn break if it delivers for them. The third thing, it's a seasonal one, but I think this year will be particularly interesting, is that Angus to flatback price spread. You see it every year, and for those that aren't aware, to give some context, it's really based on the production cycle of the Angus, well, not the Angus breed, but the Angus producers in sort of northern New South Wales and southern Queensland, most of which, if not the vast majority, are all spring calvers, which means the cattle that we're going to see turn up into feedlots, Angus feeder steers, will arrive, sort of this spring onwards. They'll be 12 months old at a minimum. Some could be pushing sort of 14 to 16 months. Those cattle, typically arrive and are sold between, say, an October and a March of the crossover year. Within the same year, between March and October, you get a period where there is a distinct lack of heavy Angus feeder supply, and the feedlots have to pay up to secure stock in that March to October period because the supply gets quite tight. It's a normal seasonal dynamic, and it coincides obviously with peak sort of mustering and supply period out of Queensland and the crossbred market. So there's pressure on one price because of supply going down, and there's pressure on the Angus price going up because of lack of supply. I think the added complexity to this year, which is what I'm interested to see play out, I've got a feeling and a belief that we're going to see these southern Angus feedlots venture north into central and northern New South Wales, the New England, the tablelands, northwest slopes and plains, to secure cattle, heavy Angus feeders, because there's not the supply down there. If we think about January weaner sales this year, a vast majority of those cattle, headed north of the border with Victoria because the producers didn't have the feed at the time to background them themselves. So they, the northern backgrounders and feedlots, if they had, vertical integration with backgrounding capacity, went and bought those Angus cattle that will turn into feeders and be marketed, and they were all dragged north of the border. And we know now that there's not a lot of those heavy Angus, or that there's not going to be a lot of those heavy Angus feeders left in Victoria. They're not really going to have a choice but to come north and source cattle. We know they did it last year into parts of central New South Wales. Some of the southern feeders came north to secure stock, and I think we're going to see it again. And because of the intensity of the dry season down there, they're going to have to come north to secure supply. And I think that, coupled with the naturally short supply of Angus, is going to see that spread really widen. Some months ago, I suggested $1 a kilo difference live weight isn't out of the question, and I still think we'll see that. It's at 50 cents at the minute, but we've still got a bit of time, before we really get into the heart of winter, and that's what happened last year. It was the last week of June where we saw that price differential get out to about 90 cents. It'll be an interesting one to watch, and it's something, we're at the end of April now. We're getting closer to winter. I'm pretty interested to keep an eye on. That just about wraps it up from the markets this week. If you're enjoying the podcast and you know of a friend or family member who would get some value out of a listen or an episode, share it with them. Great to spread the word and get this across to people interested in markets and what's going on specifically in the cattle market. And as I say, questions are always welcomed. So if you or anyone else has got one, send me an email to ripley.atkinson@stonex.com, or record a voice note of yourself, where you're from, and the question, and I'll answer it in the next episode. In the next month, we've got plenty happening. Aside from just the general markets, which I think will be interesting in themselves, there's a number of data releases which will be really interesting to dig our teeth into. MLA will have their beef producer intention survey results out for the April release, which is a really interesting one to get a bit of a pulse on how people are feeling in some more specific things rather than just looking at numbers. It becomes a bit more qualitative data, and I think it'll be good to have a bit of a look at that. There'll be the MLA Alpha Q1 feedlot brief, and then also, of course, the Q1 ABS slaughter and production numbers, which are out on the 20th of May. So plenty to get through. And as I say, that's aside from just the markets themselves. So tune in a fortnight's time. We'll have a guest on in the next month or 6 weeks as well. As I say, feedback is always welcomed. So if you've got something to share, let me know. Otherwise, enjoy your Anzac Day. Take care.